All right, we're going to go ahead and get started this morning. Welcome to today's Monday morning mortgage update. My name is Sean Woolen with the Woolen Mortgage Team, and we're going to go over kind of what's happening in the markets today and what we can do to prepare and make ourselves just be a great resource for our buyers and sellers, etc. Before we get started, I want to see if there's any update. Christy, do we have any updates on anything that's happening today, this week, and as far as the calendar goes?
Yes, we have a couple things. Okay, so May 15th, we do have Pinnacle Peak Luxury Home Tour. And the reason I tell you about some of these home tours is because we actually sponsor them and we're volunteers at them as well. So that is at Greyhawk Country Club, our golf club, and it starts at 8 a.m. It's the first and third Friday of every month. So that is May 15th. May 20th, from 11 to 12:30, we are having another color analysis with Mackenzie Swenson in the House of Color. We've had two, and they've been completely sold out. So we have about five spaces left. If you want to get in, let me know. It is on the 20th from 11 to 12:30, and it's going to be at our office. So let me know about that. May 27th, we have our social media class in Prescott, 10 to 11:30. I will have to say, if you're on here in Prescott, you have to come. We had ours, the same one we're doing in Prescott, we had last week here in Scottsdale, and it was incredible, you guys. I mean, he just really goes through teaching you how to do it. And then we actually do it in class so that you have stuff to post. So make sure you attend that. The next one here in Scottsdale is going to be June 3rd. And we typically meet, we typically meet at Pioneer Title on High Street. Last time we had to meet at the Mighty Axe in one of the back rooms there. But it is June 3rd, and that's 11 to 12:30, social media class here in Scottsdale. And then, Sean, the other thing we have is our home buyer seminar, our webinar that you're doing on the 5th. Do you want to talk a little bit about that?
Yes, so June 5th, we have a home buyer webinar. So monthlyhomebuyerwebinars.com. That's monthlyhomebuyerwebinars.com. You can also get them on my Woolen Mortgage Team website always. But this is a free home buyer webinar. It's a first-time home buyer webinar this go round. And any buyers you have that may be interested in just learning how to get started, how to prepare, the best practices, things you need to know, overcoming like myths of buying a home. That type of thing is what we're going to be reviewing. And it's going to be June 5th at noon. So check out the website, monthlyhomebuyerwebinars.com, and you can register. Your customers can register. It's a webinar, so they are incognito. They are not going to be, their names and their fit pictures aren't going to be in on like a typical Zoom meeting. It's just going to be for information purposes. I will be recording them as well, and we can always refer back to those, but that'll be June 5th. So thank you. Without further ado, let's jump right into what's happening in the markets. I'm going to go ahead and share my screen, and we will go ahead and move into here as far as, hold on, let me just do this. Technology today, be my friend. All right, so we're going to talk about the mortgage rate update. What's happening right now? What's basically the hot topic is the Strait of Hormuz, like what's happening in Iran. That is the number one driving force right now with mortgage rates. Some pieces of the puzzle are affecting mortgage rates, but not much. This is the main piece. Before I get into that, though, I want you guys to remember if our buyers get their stuff to us in time for us to review prior to going into contract, we will give them $500. It's very important that we get documents to us way ahead of time because buyers are not always truthful. Buyers are liars is a very common thing. They just don't know. So when they say, yeah, I make $4,000 a month, they used to, but now they're part-time and they only make $1,000. Like they don't know what to say. I try to make sure I dig in deep on these, but I really want to make sure, especially on self-employed borrowers, that we're getting things way ahead of time. So we're going to give them a little money for it. We're going to get rewarded for being prepared. $500 credit for all pre-approvals that give us everything we need prior to going under contract. So just a little incentive there because it is worth the headaches and the stress of not having anything prior to going under contract. So let's go over what's happening in mortgage rates. And it's not good news, unfortunately. We are in a locking position because Iran says no. They rejected the deal. There's all kinds of crazy things that they wanted. They wanted reparations in cash for what's been damaged in Iran. They want sovereignty over the Strait of Hormuz. There's things in here that the US was just not willing to budge on. And that caused us to kind of go backwards and go the opposite direction on the price of oil, which is not fun because I like classic cars and it's expensive at the pump. But it does hurt inflation. This is inflationary, and that's the major piece of this. Mortgage rates do not like inflation, and when the cost of everything goes up, that's the cost of money goes up, then rates have to go up to compensate for those changes. So just keep it in mind this way. When rates were at zero, mortgage rates had to be in the 3 to 4% range to make it worthwhile for an investor to buy a mortgage-backed securities. They needed a 3 to 4% return. When inflation is at 3 or 4, they need 3 or 4% return, which is in the 6s, 7s, right? So keep that in mind. Mortgage rates have to be typically 3 to 4% above the rate of cost of funds or inflation. And right now, that's why we see rates where they're at. So hopefully inflation will go back into the 2s. This doesn't help things though. And if rates are in the 2s, rates will be in the 5s and 6s. So that's where we want to be. This oil, the rejection of the Iran deal is not helping matters at all. So here's where we're at as far as today. We haven't moved much based on when I created these slides. This is today. We were above this Fibonacci level Friday. We were below it today. We don't have a lot to go before the next Fibonacci level, but things aren't looking great. So that probably will fall down and at least test this Fibonacci level. So we will lose a little bit more today. When we pulled this up today, we were down 10 basis points. Now we're down 15. So it is kind of creeping down to this, which means rates are going to be a little bit higher tomorrow. Not the best news. The 10-year has a lot of room. It's right in the middle of a huge range. So it can actually go all the way up to here to 4.5, which we'll probably test again if we don't get anything different in the Strait of Hormuz, like it did when way back in late March when it went up and tested the 4.84 Fibonacci level. It's probably going to go up there again unless we get some good news in Iran. Last week, we saw the employment numbers were actually quite strong. That had no impact. It's all oil right now. So not the best news, but here's where we are today. When we opened, we were at 6.42. On Friday, when we opened, we were at 6.44. We got a little better throughout the day. This will probably get to 6.45, 6.5 by the end of the day today. This is at opening. This does not count what's actually happening today. But rates are still, they're not terrible, but they've been pretty steady in the mid 6s to low 6s for the last several weeks. They did try to push up to 7 a little while back, but it was only for a short period of time. But we really need the Iran Strait of Hormuz to be opened up. We need it to be clear. We need that to be behind us so we can see rates of the 5s again. That's the only thing that'll get us there. At this rate, we're probably going to be in the low 6s to mid 6s for a remainder of the year. So not the best news, but I think the markets or the buyers are just saying it is what it is. Let's pull the trigger no matter what. A lot of these buyers aren't even thinking that they may be able to refinance in the future. So they are doing permanent buy downs right now. Temporary buy downs, I'm not doing as many of, but we are doing those. Permanent buy downs are really the key because a lot of people don't think rates will get into the 4s again. They're finally understanding how it works. And we're moving forward now just with permanent rate buy downs. This week, we have a 3-year note Treasury note auction today. Not much of anything is going to happen there. But tomorrow we have CPI, which is an inflationary model to see what's really happening with inflation. Hopefully that comes in low. I'm not expecting it to be good news because of the cost of everything going up. And then producer price index on Wednesday. I don't think it's going to be very favorable for us. So I'm in a locking position right now. And then we have jobless claims on Thursday. So that'll be interesting to see the continuing jobless and initial jobless claims on Thursday. And then Friday's not much going on, just some production numbers, manufacturing numbers, and capacity. So really, Tuesday and Wednesday's inflation reports are going to be the moving factors for today. I don't expect them to be great, but we'll see what happens. So now I'm going to talk about eliminating contingencies. Contingencies are a major factor. They are a major factor in getting an accepted contract, and a lot of people are trying to buy a home or sell a home before they buy. Now, I'm going to go over a lot of different contingency issues and how we can go over them. Every single buyer has their own threshold of pain or risk when it comes to contingencies. Some people do not want to buy a house unless it's guaranteed that that house will be sold. So those you can't really get around, but there's a lot of other things we can do. So first off, with contingencies, obviously they're stronger, a much better offer, and more power. You win more contracts. Bridge loans, I think, are the more expensive of all the options, but they do offer the best overall financial picture for the borrower when it comes to not having multiple payments over a couple homes for a short period of time. A bridge loan basically takes the money out of one house, it pays off the other mortgage, and then the payments are rolled into this mortgage for up to 6 months. So they've got some time to sell the house. There's no payments on the bridge loan. We use that money, the equity, for the down payment on the new house. We get a new loan on the new house and ignore the payment on the bridge loan. These are expensive. They are short-term loans, which, for those of you that know how hard money works, very short-term loans, they don't make money long-term on these on the interest rate, so they charge up front. So these can have between 1 and 2 discount points on them and can be expensive. But there's no payments on both of the loans. So that's the benefit. So if they don't have the risk aversion, then we might want to do a bridge loan. However, we do have the buy now, sell later program, which allows them to keep the other house, ignore the payment, pull money out of that. We ignore the payment on qualifying, but they will still have to make the payments on that mortgage that they're departing until they sell. But we don't count the payments on that against them. So when qualifying, we pull the money out with a home equity line, or if they have their own down payment, we make a cash offer. We eliminate the contingency that way. We do not count the payment against them when qualifying. And we have a couple different ways of doing that. We have a full cash offer, or we have an on-deck offer. There's some differences on here. I can get involved with that when we talk one-on-one on different scenarios because they're kind of complicated. But basically, one is a all-cash offer, no contingencies. The one we just don't count the payment against them when we're qualifying. It's a little bit different. But this is a way to get into the home, not using an expensive bridge loan. It's very similar to a bridge loan. However, we still count all payments against them when I'm sorry, scratch that. They still have to make all payments on both properties as they move forward. We don't count the property payments, but they still have to make the payments moving forward on both of the mortgage loans, or all 3 of the mortgage loans. If they have a current mortgage on their current house, then we get a home equity line, and then we get the new one. They would have 3 payments. If they're comfortable with that, we can do it. We don't count those payments against them, but they will have to make the payments moving forward, and that could be expensive and a little stressful for them. And if that's the case, we would do the bridge loan. So this would eliminate the contingencies on the departing residents and help you buy a home without selling. Then we have the Platinum Loan Approval, which is a fully approved loan through underwriting where we eliminate the financing contingency. So we talked about the home selling contingency. It's not contingent on the sale. This is not contingent on financing. We remove the financing contingency completely by getting a fully approved loan all the way through underwriting. It gets a conditional approval. We clear conditions as well. This is a platinum approval. This takes some time. We can't just get a pre-qual on a Friday and then go on a contract on Saturday if you want to take advantage of this program. It does take time. We need to review everything. But again, $500 credit if you get everything ahead of time. And then waiving the appraisal contingency is another. This was huge during COVID. We did this a lot. The ways of doing that is if you put a very big down payment down, appraisals really don't matter. So you can always waive the appraisal contingency when you're putting a big down payment. When I say big, over 20% down, typically you can get away with it. Even less than that, 15% down, 10% down, it really doesn't matter because all we care about is as long as we have a minimum of 3 or 5% equity based on the appraisal value, we're good. So we could talk about this too if you have special circumstances, but a large down payment always helps. Also, I can run DU and LP before you make the offer to see if we get an appraisal waiver. This is key. If we get an appraisal waiver, you can make an offer. And you can also tell me, hey, Sean, I know the listing price is 700. Let's run it at 720, try to get an appraisal waiver, and then we can ask for $20,000 to pay for the rate buy down. You can go over asking, run it through the system and see if we get an appraisal waiver that way. And that way you can ask for that. And the seller will be like, well, I don't think it'll appraise. And you can say, aha, well, I have an appraisal waiver at that price, so it doesn't matter. Then you can get the house. So a really cool tip, trick. Traditional appraisal waivers, you can always just waive an appraisal. Take the risk yourself, waive the appraisal. You can always do that. But we can run it through DU and LP and have confidence in that. So those are some of the contingencies that we can eliminate. Anyway, if you have a contingency, let's get creative. Let's work together to eliminate those contingencies, because that's the number one reason for a seller rejecting an offer, other than you just lowball the heck out of it. But if you have anything that's holding you back from getting an approval, let's review that. Let's go over ways that we can help eliminate contingencies from the loan side. And let's get a strong offer so we can move forward. Any questions on contingencies? Everyone's allowed to talk, so you can hop in if you want. All right, well, let's hope this Iran issue gets behind us quickly. I think it's going to drag on through the summer, unfortunately, but it's just, I don't think Iran can be dealt with, to be honest. I just don't think they can negotiate. So it's unfortunate, but hopefully, Lord willing, it'll come to an end quick, and we'll see gas prices come back down, inflation come back down, and mortgage rates come back down. But until then, you guys call me if you need anything. Shoot me an email, text. I'm always here. And then if you have any home buyers that are looking for that insight for first-time home buyers, that's June 5th at monthlyhomebuyerwebinars.com. All right, guys, have a wonderful week, and we will be in touch.